please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good morning. Welcome to Chartbusters. Well, it's good going for the Nifty. We're holding at around the 10,500 odd mark. We've had a good run and we're holding on to good gains. Well, Mangalam, things looking good. Friday morning. Let's see who goes into the weekend. Either the Bulls will go to party or the Bears. Maybe they'll fight back. But this week belongs to the Bulls for sure.
This week belongs to the Bulls for sure. Last 6 sessions, the Nifty has gained, 300, 350 points. Add the today 40 points and you have closer to 400 points. The most important part, Nigel, is the Friday the 13th today.
Yes.
4 out of 5 last Friday the 13th, we saw a close in the red. That doesn't look like it's happening today, but never say never. You're wearing a red tie. We'll keep an eye out on all of that. But first up, all the top stories that we're tracking at this point in time. Higher aluminium and alumina prices continue to boost metal stocks, Hindalco, Vedanta and NALCO.
And the race for Fortis Healthcare heats up as the third player joins the fray. The Burmans and, in fact, Munchals, they propose to invest 1,250 crore rupees into Fortis via preferential allotment.
HCL Tech, that one trades lower in today's session. The company acquires Palo Alto-based Actian Corporation for US dollars 330 million in an all-cash deal.
And Infosys is in the green ahead of its Q4 results today. A CNBC TV18 poll sees the dollar revenue growing by around 2% in a seasonally weak quarter. But the key will be commentary from the new CEO, Salil Parekh.
Quality and agrotech foods, both of them in focus on the back of large trades. Yesterday, Letco Bruso Emerging Markets Fund bought about 36.5 lakh shares in Quality, while Purinju's fund, Equity India Fund, bought about 1.5 lakh shares in agrotech foods.
Well, all eyes are on Infosys, but I think we should pull up Tech Mahindra. That stock as well is moving quite, pretty strong in the last few minutes. And even Tata Motors, just keep an eye out on that stock. That as well is doing quite well. So a couple of these stocks, they are fighting really for the bulls. Hindalco, you need to keep an eye out on that stock because aluminium prices, they continue to hold at around 2,250 plus odd mark. If they sustain at these levels of around $2,300, well, you never know what could happen to Hindalco. That is, one of those plays on aluminium. And NALCO, well, blue case scenario really playing out for them. Aluminium prices are higher. You have alumina prices as well are higher. The big question is, can these prices hold out? But the Nifty is doing well, 10,500. It's a 550-point rally from the lows that we saw in the last week of March. Where do we go from here? Ashwini Gujral joins in. Hi, Ashwini. Good morning. What's the trade on the Nifty from here? Can someone look to buy the Nifty at these levels or have they missed out on that opportunity?
Well, good morning. Nifty has so many legs right now that it's difficult to bring the Nifty down substantially because IT and banks both are firing. Within banks, both retail and corporate are firing. So that way, I think if there are shorts above 10,500, they have something to worry about because if this rotational leadership starts, then it's very difficult to get a market lower because something starts to perform. So yeah, not the best point, but it can still be bought, Nifty, Bank Nifty, both of them, and chances are you'll end up higher almost every day. Sometimes it'll be a small gain, sometimes large, but it does not look like you'll get major dips. Having said that, individual stocks, I think Bank Nifty has had a bit of a breakout above 25, 230 to 250. Hence, I am focusing on banks. HDFC Bank is a buy with a stop of 1930, target of 2010. BOB is a buy with a stop of 146, target of 160. And Canara Bank is a buy with a stop of 276, target of 290.
All right, Ashwini, hang in there. We have Ashok Leyland, some flashes on your screen. Bags a 100 crore worth order coming in from the Defense Ministry. Not too big in their overall scheme of things, but definitely directional positive. That stock spikes to the high point of the day. And also, Ashwini, you spoke about the strong legs. My director can quickly pull up the 10,500 put. It's just been, what, one and a half hour to trade right now. And that one's added close to 8-9 lakh shares on the short side, the 10,500 put. Let's see whether that holds out or not. If that does hold out, indeed, there could be some more short covering. Ashwini, a word on Ashok Leyland and some further short covering likely?
Short covering on Ashok Leyland?
No, on the Nifty.
See, definitely, because if, all of these sectors start moving higher, IT went down, I think, 70, 80 points. Again, that sector is back into the green. So now there is a bit of momentum and chances are that shorts are covering. That is why the dips don't last too long. Ashok Leyland has been between this 140, 150 band. I think today is somewhat of a breakout, and next target here could be 170, 175.
All right, Ashwini, if, final question on the Nifty from my end. If someone has a long position, where does the stop loss come?
See, I think 10,430, 450, which was yesterday's breakout zone, that is now a decent stop. Similarly, on the bank Nifty, you can say 25,200 should act as a stop now.
430, 450 is what you're saying, Ashwini. So 10,500 put, that one has a premium similar to that level itself, I think. But a word on the pharmaceutical stocks before we let you go, Ashwini. All of them are buzzing in trade, no-go zone.
See, pharma is a stop-start type sector. In terms of export, I think IT should be the only sector you should focus on. In the pharma, an odd Biocon could be doing well. But other than that, most stocks are still kind of range-bound.
Okay, all right, Ashwini, thanks so much for joining us and giving us all those details. Well, keep an eye out on the Nifty. But Mangalam, a few of these stocks, like a GNA Axles, the stock has had a good run. Today, I saw, in fact, the stock was down close to 2%. Now, from those lows, if we can get an intraday chart, you'll see that that stock has spiked up and how it's moved to the high point of the day. So keep an eye out on that one. And it's a Friday, also keep an eye out on VIP clothing. That one, in fact, is up close to around 4.5% as we speak in the last few minutes as well. Volume spiking up over there. And Ramco Group stocks, well, they have been having periodic good runs. Ramco Systems now is up close to 4%, close to 3% of that move has come.
Hotel stocks doing fairly well as we speak this Friday morning. In fact, Indian Hotels is up 5%. Adding to that, we have EIH as well, the company that runs Oberoi Hotels. That one too is moving well and moved to the high point of the day. This morning we had a note coming in from UBS. They had the hospitality day and their participants were quite sanguine. In the newspapers as well, they said that hotels in Bombay and Delhi are seeing 80% occupancy. That bodes well for both Indian Hotels and Oberoi. So we'll keep an eye out on that. But one stock on our radar right now is Om Metals Infra. That one's up 5. That's Indian Hotels. Om Metals and Infra is the one that we're talking about. That one's up about 4% in trade as we speak, as the company has bagged an order from SJVN worth about 157 crores. We have Vikas Kothari, the director of the company, joining us to give us more details. Thanks a lot, Vikas, for joining in. First up, if you could tell us the tenor of this order, the kind of margins that you're likely to get on this order. And you have a 740, 750 crore worth order book. When do all of these orders come in for execution?
So this 757 crore order book is going to be executed over the next 3 to 4 years. Some of the projects, this consists of almost about 14 projects. And of the 14 projects, about 10 projects are going to get completed in the next 1 or 2 years. And the remaining 4 projects are going to take about 3 to 4 years to get completed.
All right, Vikas, so, you have a good order book visibility is what you're telling us. Some kind of numbers, if you could give us for FY19, what kind of a revenue growth can you register? Kind of margins you're looking at?
So FY19, we are expecting a very good growth of over 20% in terms of our revenue. And our margins are, the same as always. We do double-digit margins. Our EBITDA margins are over 15%, around 15%. And our net margins are, 8 to 10% in all of this order book that we've already logged in.
All right. You sound pretty sanguine, and I was reading through your press release, and you said you expect close to around 1,100 crore worth revenue over the next 3 years, 800 coming in from the housing projects, some real estate division, and 300 from your core business. If you could tell us the kind of real estate that you're sitting on, what kind of money you can make from those projects?
So as we speak today, our core business is engineering, construction, and real estate is only opportunistic investments. But fortunately, all of our opportunistic investments in real estate have paid us very handsomely. And the monetization of the real estate land bank has already started. We expect a good revenue coming in FY19 from real estate as well. I was only talking about growth from our engineering revenues only. So if you add in real estate revenue, we expect a much higher growth in our revenue from FY18 to 19. Yeah.
Yeah, give us some numbers, because for the last few years, the street has always been talking about the real estate that OM Metals has. Give us a sense. What is the total land bank? How much of it is under development? And as my colleague Mangalam just asked you, you must be sitting on some unsold inventory, right? So what is that?
So we have, as we speak today, we have projects which are under execution and under sale, Kota, Hyderabad and Jaipur. This is the land bank which is under monetization. Now, the expected revenue just from these three projects is around 1,000 crores, of which about 200 crores has already been recognized. Roughly, around 200 crores has already been recognized. So we expect another 800 crores to come in into our revenues in FY 19 and 20. So you can expect, a good number contribution from real estate.
Okay, so in that case, I'm just calculating the numbers that you're saying. The first 9 months, you've done close to around 190 crores. Add another 20, 30 crores, 40 crores to that. The next year, you do a 15% growth from your core business, say 360, close to around 260, 270 crores possible in FY19 from your core business. Add another, say 100, 200 crores from your real estate business. Is that the ballpark that one is looking at, closer to that 450, 500 crore mark?
Yes, absolutely. That's the mark that we are looking at in FY19 and a much larger growth in FY20 also, both from our engineering business and our real estate business.
All right. So in that case, can you tell us what's the kind of debt on your books? Your finance costs for the first 9 months have also increased.
Well, fortunately for us, our real estate land bank has almost negligible debt. We have not, all our land has been bought from internal accruals, so we have no debt on that land bank. We have had to take some working capital loans for execution of the order book. So therefore, our finance cost has shot up a little. But here on, we don't need any debt for monetization, and therefore, the debt is only going to come down going forward and almost become negligible.
Okay, so Vikas, since it's negligible, since it's small, we would like some numbers from you. Last year, your consolidated finance cost was at around 37 crores approximately. So what is your consolidated debt in your books? And we only have the standalone numbers as of now. I think for the first 9 months, your finance cost was around 13 crores approximately. So what is the standalone debt and what exactly is the consolidated debt, sir?
So standalone debt should be around 40 to 50 crores. Exact number I can let you know, but 40
including
to 50
working capital, because including working capital, because if your finance cost for the first
our working capital utilization varies from month to month and quarter to quarter, but our average working capital utilization will not be more than 30 odd crores, 30 to 40 crores.
Are you borrowing at 20%? Because the first 9 months you've paid around 13 crores in interest. And you're saying 40 crores the debt on your books plus the working capital number that you're saying doesn't add up, right?
No, this debt number it could also be part of the packaging debt that we have taken, which is roughly around 25 odd crores.
So we are asking the complete consolidated total debt on your books, including your packaging debt, to the working capital, along with the long-term debt that you have.
Should be about 70-80 crores.
Okay. What's your borrowing cost?
About 12-13%.
So those numbers, I think, Vikas, we'll have to take a relook at those numbers, because at 80 crores and borrowing at 13% approximately, it doesn't really add up.
No,
Please clarify that. Yes.
Maybe what you may. So we have a debt of from that road project. So I don't know whether that finance cost that you're looking at is consolidated and is the payoff.
It's standalone, the numbers that you have reported to the Bombay Stock Exchange, Vikas.
Okay, we'll have to then check on those numbers and come back to you.
Interesting. Vikas, so you come back to us with those numbers, but for the time being, I remember the last time you joined us, you were saying that you had only one road asset. You were scouting for a buyer. Is there any progress over there? Once that asset gets sold, what kind of debt goes out of your books as well? Give us some clarity over there at least.
So we are, continuously looking for monetizing this road asset. We have not been able to find a buyer on this road, but we are hoping that we should be able to get some respite, because this road has been announced to be taken over by NHAI, by the Government of India. So We are hoping that that process gets completed and the NHAI takes over this road. So once NHAI takes over this road, then they'll obviously pay us back for our equity and also take over the debt portion of it.
Yeah, because your shareholders as well will be very optimistic that you manage to sell that and things get streamlined very soon. But once they take over that project, once the road asset moves out of your books, how much of debt goes with it?
There's almost about 170 crores of debt that we have on the road project.
Okay, so that
in the consolidated level.
So that moves out then.
So that moves out completely.
Okay.
Yeah.
Okay. Final question, because for the last few years we have been looking at home metals. We didn't get a number about what is the total in acreage. If you could give us the total land bank that you have and how much is already being executed and what is left.
So we have 26,000 square meters of land bank in Bombay at a very prime location in Bandra. Then we have about 4.5 acres of land in Jaipur, which is being monetized. We have about 10 acres of land which is being monetized in Hyderabad. And we have roughly around 10 acres of land in Kota also, which is being monetized. So that's pretty much all our land bank, of which, barring the Bandra project, everything else is being monetized as we speak today. And the revenues are expected to come in FY 19 and 20, and at best 21. That's it.
All right, Vikas, thanks a lot for joining us with all those details. We'll keep an eye out on whether the numbers reflect the kind of optimism that you have right now, though the stock is down 20% in the last 3 months.
And keep an eye out on a few of these defensive stocks. You have Glenmark that's moved to the high point of the day. And from the tech stocks, well, we have NIT Technologies as well as Mindtree. Both of them have spiked up in the last few minutes. So let's pull up the intraday chart of both those two stocks. Both of them moving quite well as we speak. Well, NBCC, they continue with their order wins. They bagged an order worth nearly around 300 crores in Odisha. So keep an eye on that stock. No worries in terms of order visibility. Their order book has really, spiked up for them. And now delivery is going to be quite crucial. But the big stock really today is going to be Infosys. It's gaining even in today's trading session. It's going strong actually into its numbers. Reema Tendulkar joins us to run us through the expectations. Reema.
Yes, going into its earnings quite strong on account of the recent appreciation, but the sector per se has been an outperformer on expectations of a pickup in global growth, a portfolio shift away from banks to IT, as well as the underweight positioning of large investors in the sector, which got corrected. So Infosys per se has rallied close to about 10% on a YTD basis. The March quarter expectations on the top line, that's dollar revenue growth, is seen higher by 2% sequentially. Now Q4 is a seasonally weak quarter, but this quarter will look better on a year-on-year basis, largely on account of the cross-currency tailwinds. On a constant currency basis, we are expecting a growth of about 0.8 to 1%, which would compare with no growth in March of 2017. EBIT margins will be flat at 24.3% on a quarter-on-quarter basis. Optically, the profits will look lower sequentially, but that's because the prior quarter, that's Q3, had a reversal of an income tax provision. If you strip that out, then profits would also be on the flatter side. Now, with these numbers, the company is on track to achieve its FY18 guidance. So in constant currency, revenue should be close to about 6%. The margins should be within the company's guided band of 23 to 25%. But the key to watch, as always, will be their FY19 guidance. This will be the first guidance, coming in from the new CEO, Mr. Salil Parekh. The street is working with a constant currency guidance of 6 to 8%. Some believe it could be a little more conservative and come in at 5.5 to 7.5%. But if it is 6 to 8%, that means at the lower end, growth will be similar to what they saw in FY18, and at the upper end, which is 7.5 to 8%, there is an acceleration in growth. We'll see how conservative the new CEO gets. The other thing to watch will be the heightened management attrition that has come through on account of the management churn, the initial strategy of Mr. Salil Parekh on the capital allocation, his strategy. There will be an analyst day on the 23rd of April, so we'll get more color on that. And also sectorally on BFS, that's banking and financial services, where Infosys has sounded more confident and optimistic compared to its rival TCS.
Thanks so much for that, Reema. Well, Mangalam, things are looking good. We're holding at around the 10,500 odd mark, so pretty good going on there. From the broader markets, a couple of smaller stocks, 20 microns, that's a play on the paint industry. that stock as well that spiked up. So I think we should pull up the intraday chart there. Besides that, tell you what, 20 microns is the broader market stock that needs to be pulled out. But from the frontline indices, there's struggle at the PSU level, because if you take a look at the Nifty, that's at 10,500. The Nifty Bank up close to around 110 points. But if you take a look at the PSU banks, SBI is at the low point of the day. There's some important flashes on the screen right now. There are government sources who say Deepak Kochhar has promised to reply to the IT department notice by today. Let's see if there is any reaction on ICICI Bank. Was fairly holding up in the green all through today's trading session. Deepak Kochhar was supposed to reply to the IT notice by April 10th, so it's April 13th. He has promised to reply to them today. Let's see whether there are some developments out there or not. We'll watch out for that. If Deepak Kochhar does indeed fail to reply by today, then he will be called in for interrogation. I think we'll get Utkarsh in a bit to give us some more details on that one. But right now, government sources are saying that he has promised to reply to the IT department by today. He was supposed to reply by April 10th. It's been April 13th. If he does not reply today, he will be called. I think we have Timsi with us, Mangalam. I think we have Timsi. She's the one who's bringing us all these exclusive, source-based information. Timsi, fill us in.
Well, yes, you rightly said. Deepak Kochhar, who was first issued a notice by the IT department on April 3rd, in an email reply to IT department, has agreed to all the details, all the necessary details by April 13th, that is today. He was supposed to respond by April 10th, but he failed to satisfy IT department. IT department, in an email exchange, in a reply to the notice, to the notice that Deepak Kochhar had sent, says that you please explain the source of 325 crores received by NU Power Renewables by two Mauritius-based entities, to which Deepak Kochhar has promised in the email itself that he would give replies by today itself. If he fails to give response by today, then IT department, in the normal course of procedure, would issue a notice for a public appearance. We will send summons, which means Deepak Kochhar will have to come in front of the IT department to explain sources for further interrogation.
Okay.
All right, MC. Thanks a lot for giving us all those details. So that response will be closely watched out for. But watch out for SBI. We were talking about that at the low point of the day.